Hi everybody, thank you for checking in on our YouTube video today, and we're going to talk about loan options. I have with me today Sharon Burgoon from SWBC Mortgage, and of course I'm Carol Knott-Teff with RE/MAX Integrity, the hometown team, and we have buyers who are coming in here with misconceptions about how much down payment they need, how much closing costs are, why can't somebody else pay my closing costs for me, things like that. So we're going to talk about some lender options, and we have, as you all know, probably FHA loans, VA loans, conventional loans, and every once in a while, USDA loans. Sharon is an expert in all of these things, and she's going to tell us a typical buyer, what's the advantage of FHA versus conventional, because not everybody's going to be VA.
That's correct. So great question, Carol. And FHA and conventionals, we usually look at their credit scores. So on FHA, you've got FHA insurance, and it's only 3.5% down. So usually when an FHA buyer has a lower credit score, that's why we want to go FHA. With conventional, if someone has over a 700, close to an 800 score, but still a lower down payment, they may want to go conventional because the private mortgage insurance for that borrower is going to be less than the FHA insurance.
Okay.
So we'll look at both ways, but the payments are going to be less on the conventional with a higher credit score borrower.
Okay. And with FHA, even if you get equity enough in the house to get an 80%, 80-20 loan to value thing, isn't it true that that insurance on an FHA stays for the entire term of the mortgage?
That is correct. Right now, FHA does not drop the FHA insurance. So the best way to get rid of the FHA insurance, if you can, is to refinance into a conventional loan if you have, a little bit more equity and your credit score has improved.
Okay. Whereas in a conventional, let's say I only put 10% down, but the price of the home value goes up, or I make some accelerated payments, and I'm 20% vested into the home. I could have a reassessment of the appraisal, and I could drop that.
That is correct. You can request the PMI insurance to be removed from your payment, from your loan, and the lender will look at what the appraised value is on that property versus the principal balance that's currently on your loan.
Okay, good. And now VA, I had someone ask me, my daddy was in the Army, do I qualify for a VA loan?
No, you have to be as part of service. You had to give service yourself. You have to had an honorable discharge and received a DD-214.
Okay.
So that is how you're eligible for a VA loan.
Okay. And then USDA, the fourth type of loan. How do I know what that even is?
USDA loan is for property that is rural. And where is that property that's rural? It is dedicated by USDA on their website. So you can put in the address of the property that you're interested in to see if it is eligible for a USDA loan.
Okay, just because I think it looks like a country property doesn't mean it's necessarily eligible for USDA.
That is correct. And there may be property in the city that is eligible.
Really?
Yes.
Did not know that.
There are places in Tomball that are eligible.
Okay. Is a USDA only acreage?
No, it can be in a subdivision, a single family residence. It can be acreage. You just have
It's all about location and how the government has designated that property.
That is correct.
Okay. And do interest rates on a USDA loan run normal, higher?
They're just even with what FHA is doing, yes.
Okay. And they require 0% down as a down payment?
They do. Yeah, 0 down as a down payment, and then we would need to see tax returns.
Okay.
For everyone that's earning income in that household.
Okay, so as a synopsis, the only 0% down loans per se are VA loans, and it has to be a veteran.
Correct.
Or USDA, and it has to be a government designated location that qualifies for a USDA loan.
That's correct.
Can a person put money down on a VA or USDA loan?
Yes, they can. They can. And what that does, it lowers their payment.
Sure, because it lowers their borrowed amount.
Right,
Yeah.
right.
Okay. Not going to lower the interest rate, just going to lower the
That is correct.
the principal.
That
Okay,
is correct.
Got it. All right. And so let's just say that buyer who's never bought before is excited to buy his or her first home. And they come in and they say, I've been saving for a house and I have down payment, I think. Can my friend give me money so that I can have that?
So gift Gift funds are allowed, but from family members only.
Good.
So they have to be a spouse, a parent, a child. It could be a niece, nephew, but
Okay.
blood relatives.
Okay, good to know. So my aunt could give me money, but now they have to document that it's a gift. It's not a loan.
That is correct. They will sign a form, a donor's form, that says it is a gift and it is not to be repaid back. And then we do document.
And we see that more with FHA than anything else.
Yes, it happens for both, all loans. If a parent wants to give money to a child.
Okay, and while we're on this subject, let's say that got the down payment, I've got a great credit score, I can buy this house, I can move forward, but no one ever warned me about closing costs. And so the realtor says, well, maybe we can ask the seller to cover some of your closing costs. What are the limits on an FHA or conventional loan that a seller can actually contribute toward closing costs?
That's a great question because they're all different. On FHA, a seller can contribute up to 6% of the sales price towards the buyer's closing costs. On a conventional loan, the seller can, on a 95% loan to value, when the buyer has put 5% down, the seller can contribute up to 3% of the sales price. If the buyer puts more than 5% down, then the seller can contribute up to 6% of the sales price. That's the limit. On VA, the seller can contribute up to 4% of the sales price. So that could add up if it's a high enough sales price.
Sure.
And you may not need all of that to cover closing costs. So, if you only need 2 or 3% of the sales price, then, and the seller's willing to give more, then maybe cut the price of the home or do something else.
Right, because the last thing you want to do is get a seller to agree to 4% and you only need 2%, and that money has just kind of gone to waste and you haven't been able to properly negotiate your contract. And that's where you need a good realtor. Thank you. I think these are questions that a lot of people are not clear on, and maybe will open the door for some potential buyers just because they see a way to make it happen. So if you're watching this and you have questions, please, first of all, subscribe to our YouTube channel and ask us any questions in the comments or reach out. And Sharon and I both are here to help you, and we thank you for your time today.